focus on panels where we bring a panel of experts together just to discuss something that's hopefully topical and hopefully relevant to the average small business owner. So if you're tuning into this live or on the replay, then you can all sort of like put a question in whatever platform you're on, or an observation, and we'll do our best to sort of comment on it, and so it can add to the conversation that we're having. As you can see from the ticker tape going along the bottom, there's a lot been going on in the finance world recently, so we thought we'd just explore that. So before we dive into that, if we just go around the room and let each of my experts introduce themselves. So James, do you want to let people know who you are and what you do?
Yeah, thanks, Paul. Good morning, anyone listening. My name is James Blackwell. I run a commercial finance brokerage called JB Commercial Finance. I've been doing this for over 7 years now. I'm helping business owners and property developers find finance where others can't.
Thank you very much. And Roger?
Yes, hello everyone. I'm Roger Eddowes from Essendon Accounts and Tax. As the title probably alludes to, we're accountants, but we're also known in the area as the business godparents, as we're there to support our clients as and when they need that support.
Excellent. And last but not least, Neil.
Thanks, Paul. Yeah, Neil Watton from WKM Wealth. Similar to what the guys have already explained, in different guise, we help personal clients in terms of their savings and future planning and investments, which have been through a rocky patch recently.
Okay, all right. So let's have a little chat then. So I guess the first place to start is just sort of like looking at the market reaction to the recent mini budget and what impacts it has in your different domains, and what can small businesses do, or what can investors do? What are some of the actions they can take to either alleviate or overcome or benefit from the changes that are happening. So Roger, if we come to you first, what are your thoughts on this, and just what I've asked really?
Well, I mean, the market reaction has spooked a lot of clients because interest rates are going up and like to go up perhaps even further as a result of market confidence and things, and that's making some clients question whether they're going to invest further in their business, whether it's buying equipment or taking on new members of staff. So everyone's starting to be a bit more cautious, I would say.
Mm-hmm.
On the other hand, for some wealthy clients, they all got excited about potentially lower tax bills, with the 45p going down to 40p, but their honeymoon period quickly came to an end, obviously, with the U-turn earlier this week. But we did have one client, for example, who knew that she was going to delay all her profit extraction for her company to the following year because it would save £250,000 worth of cash.
Mm-hmm.
But sadly, it depends what viewpoint you take, but she's now disappointed she hasn't got an extra £250,000 in her pocket. But she never had it to start with, so she's back to where she was. Yeah. But I think it has sort of spooked people's confidence because of the interest rates going up at the moment. And obviously, some people we've got a few people in the property world, and suddenly they were looking for mortgages, and although they got offers in principles, and I don't know whether my colleagues here would explain more, but suddenly they were withdrawn. And when they were thinking they were getting 3%, and they go back to their lender, they initially said 5%, but then withdrawn the product.
Mm.
So everything's sort of, it's a bit like throwing a grenade in, wasn't it? And everything just comes up, and we're just waiting for everything to settle.
So James, if we come to you, then it would make logical sense, given what Roger said. Given the domain you're in, where you're sourcing funding for people, what have you seen, and what impact will that have on your potential clients?
Yeah, I mean, much like what Roger says, when base rate goes up to 2.25% now, but the main killer really was the leak, for want of a better term, that experts are predicting base to go up to 6% next year. And that literally created a real ripple effect in what I do. And the next day I had a flurry an email box full of lenders withdrawing products or withdrawing altogether for a period of time. And what Roger says there about mortgages is absolutely right. I mean, I don't deal with residential mortgages, but I do the odd buy-to-let and obviously a lot of commercial stuff. And a couple of the sort of more minority type lenders have reappeared today in the marketplace, and the fixed rates they're quoting start with a 7. which, is not something we've seen for an awful long time. And one particular lender, I've got a deal agreed with them, which should complete this week at 3.9. They're now starting at 7.4%. So literally their rates have virtually doubled. And as well as their actual criteria is tightened. So how are they going to get any deals through based on the affordability is a complete mystery to me. And this is going to be an issue that affects us all for a considerable period of time. And I recently did a blog and a video on people don't necessarily think this affects them when base rate goes up, but it means that the cost of everything that you borrow will go up, whether it's on a credit card, whether it's on a personal loan or some car finance, and of course, most importantly of all, your residential mortgage. We're seeing now horror stories of people who have got fixed rates coming to an end now, who are fixing at 1.5%, 2%. Can you hear me?
Yeah, go ahead, Jay. Yeah.
People's fixed rates are coming to an end. They're paying 1.5%, 2%, and now being quoted, 4.5%. And for anyone who's maybe not so up on what that actually means, if you're paying an extra 3% on your money, that's an extra £3,000 in interest on £100,000 per year. So if you've got a 200 grand mortgage, which isn't exactly unreasonable, you're paying £6,000 interest extra a year, £500 a month for the privilege of the same loan. And that's a massive burden at a time when inflation is historic highs as well. So the market reaction to the mini budget was hugely negative. The financial market's reaction to the interest rate increase has been astonishingly brutal. Certainly in my 20 years, the most, I've never seen anything like it, even in 2008. And even in lockdown, this has been the real first. And the impact will be felt for a long time to come, I feel.
Yeah, I think so. Neil, so an interest rise probably isn't too bad for investors you're working with, is it? What's your view on the current climate?
Well, yeah. So interest rates and the gilt, so the rates at which the government have to pay to borrow money. It has. So the spook from the mini budget was that rate jumped markedly, materially, and very, very quickly. And the effect that meant was that basically the way most stocks and investments, especially income ones, so ones that pay dividends regularly, they're priced on a basis of future cash flows, without getting too technical, divided by the risk-free, which is the gilt rate. And if the rate on the gilts goes up, you're dividing by a bigger number, so the value of that future cash flow is lower. So effectively, the safe, and I am using that, investments, gilt, bonds, dividend yielding stocks and shares, has suddenly, overnight almost, the value of that reduced. And that's hit a lot of people. And that's been a bit of a story of this year, but it was markedly more so last week off the back of the mini budget. So often people might have historically had investment portfolios of the 60-40, which is a historical view of 60% in stocks and shares and 40% in bonds and other sort of similar things. That portfolio suffered hugely this year, both off the back of interest rates rising, government gilts rising, future interest rate expectations rising. So there's been a flurry of announcements and the general tide has gone that way. It's just the mini budget exacerbated that really significantly. Like James said, it's kind of a one in a whatever time period event to a degree. So equally on the flip side, if you stayed in cash or got a load of cash in the bank, interest rates are such that actually you're getting something eventually. And like James alluded to, in terms of borrowing and mortgages, I was actually shredding some stuff at the weekend, some old mortgage paperwork, and they were about 5%. And that was kind of normal. And then we just lived through a period of unnormal, not normal interest rates. So I think it's a bit of a reset as much as it's harsh for a lot of people. So interest rates have not helped investors. Having said that, is there an opportunity now? Maybe. I don't know, no crystal ball.
I think it's a really interesting point you made, Neil, about historic base rates, because I think we're very similar ages, and I bought my first house and my first fixed rate was 6.5%, 6.75 or something, which back then was absolutely fine. And obviously when base fell initially to 0.5% in 2008, it was for emergency situations. But the issue is that people have got used to that very, very low rate base environment. And not only that, we've got a whole generation. Effectively, you're right. If you're under 37, 38 years old, you've never known a market where base rate isn't 0.5%. And let's face it, those of us who are a bit older still have got very used to it. So while historically 2.25% is still very low, we've got a whole generation who have never experienced anything like it, and that's inevitably going to have negative consequences. And why the Bank of England haven't taken the steps to slowly increase the rate over the last 5 years, while things were generally very good, albeit the last couple of years obviously it's been different, is beyond me, and shows very poor monetary planning, I have to say.
Mm-hmm. So Neil, could investors have seen this coming, and could they have shifted where they were investing their portfolios so they maybe weren't impacted by the recent developments?
Short answer, no. But if you look back, as we often do, we look back at what, say, the Federal Reserve in the US is the main central bank that most people or investors look to for kind of guidance and thoughts. And we look at that, and the shift of that committee over the last 12 months has gone from it might rise a bit to foot on the gas sort of thing. So it's really caught them, and again, like James said, probably poor foresight on their part, or the whole transitory inflation thing they kept talking about. So could investors seen it coming? I don't think to this magnitude. I guess interest rate rises were to a degree expected, because they have been, US and UK have been on the floor for ages, years, and I guess they had to come back, but it's the way and the timing that has probably caught most people off guard, including those central banks. So I think investors have not got that crystal ball. However, are most people in this for the long term in terms of investing? There should be. And often people think about risk as in the ups and downs. Well, the risk is actually looking ahead. Can you afford to do that thing in now 10 years, 50 years, 30, whatever it is? So it's still, in our opinion, opportunity out there, and you've got to be in it for long term. This is a short term hopeful reaction. But I think, as James said earlier, it's probably going to be felt. The impact on gilts and all the interest rates is going to linger for a while, I suspect, as well.
Mm-hmm. So Roger, what sort of advice are you giving to your clients? If it's going to be more difficult to borrow money, or not more difficult necessarily, but it's going to be at a higher interest rate, are businesses going to be stifled? Are they going to be a bit stagnant for a few years before things stabilise, or what would your view be on that?
I think there will certainly be a bit of stagnation in terms of larger investment projects. I don't think it's going to necessarily curtail a sort of what I call day-to-day investment. Maybe someone needs to have a new member of staff or something like that. I think it won't affect things like that, but it might, for example, someone, I don't know, has got a factory and actually wants to actually buy the property that they're occupying. Decisions like that will be put on hold. But then there are some companies who are fairly cash rich, and what the danger we've got is with inflation is that suddenly something that was worth £1 last year is only worth, say, 90p now. And they're actually not investing that money in something which is actually generating them income or even a return. So they're actually seeing their cash reserves dwindle away, even though it may only be 10, 11, 12% a year, but it's still, still adds up a sizable figure.
Yeah, absolutely. Yeah, that is a big chunk, isn't it? Absolutely. So, James, what do you think the future will look like then? Will this get back to some normality? What sort of timescales do you think it'll be, or are we stuck with this sort of inflation and interest level for many years to come?
Well, I mean, if history tells us anything, it says that everything resets ultimately in the end. I'm not that old, but I still remember in 2008 it was the world's coming to an end. At the start of COVID, of lockdown, it was the world's coming to an end, and I'm sure people can think back to the recession in the early 90s, and going back post-war, Great Depression. There's always been something, hasn't there? So there's no doubt at all that things will at some point revert to what a normal is. Now, what normal is with regard to interest rates, I suspect we will see a balancing out. I remember in 2000. 2010, 11, when I was at the bank, predict that base will be back to 4-5%, and it didn't happen. So I still think that will become a normal situation, and things will stabilise. My particular world, will it take time? Yeah, it will, because the knock-on effects of Brexit. We've got the knock-on effects of 2 years of lockdown, which has on finances. So it will take time. But I have no doubt we will be back to a normal situation in a year. I think we'll be doing well. Well, I don't think we'll hit a recession, because the economy ultimately is still recovering. But the definition of a recession has changed as well, if you blame the American pundits. So are a lot of businesses going to struggle over the next year or so? Yes, I do believe they are, especially those that are highly leveraged. Are people going to be putting off making decisions, as Roger alludes to, which normally they'd make, which would allow growth and development? Yeah, I think there will be. Will the economy recover? Yeah, of course it will.
Yeah, it's just a matter of time, I guess. Mark, who's joining us in the background in the studio, as it were, said his mortgage in 1989 was 14.99%, which for any millennials listening will give them a heart attack, I think, thinking about a mortgage rate being...
imagine talking to a first-time buyer like a year ago and saying 14.99%. I mean, it's...
Yeah. So do you think, I just randomly pick you, Neil, seeing as you're next in my window, so do you think this will have an impact on the house buying situation at the moment, and there'll be less people buying houses now because the products seem to be being withdrawn from the market right now, so there's less options, and those that are there are going to be more expensive than they were prior to all of this? What are your thoughts on that?
Yeah, and the stamp duty adjustment that was also within the mini budget has largely, therefore, almost now become a bit of a moot point because of the cost of borrowing for most people. I guess, though, there's still going to be people that are in a good position to move, have equity, whether that's up or downsizing. I suspect it will slow things, undoubtedly, because there is a period of uncertainty. Because as James said earlier, the pulling of products from the marketplace was a reaction largely to those gilt price moves and interest rate expectations. As and when those things slow down a bit in terms of the reaction to them, and the market gets some certainty that it will be progressive rather than reactionary. And I would expect those 7 or whatever percentage fixed term mortgages to ease. Not going to fall to the floor, and that might just help give people some more certainty that things are affordable. So personally, my thought would be that if you're coming off some sort of fixed term anytime soon, it's not to do too much of a big reaction, just to go for anything you can get on the basis if you can afford to go on a standard variable for a bit. I'm not making a prediction there, but it might be that's opportune to wait rather than fixing it, say 6% or whatever. It might be that in 6 months we might be looking back and go, remember that, or not.
You got to put a disclaimer in, haven't you, Neil? This should not be taken as advice in any way.
Absolutely. And I don't deal with mortgages either, personal, whether corporate or personal. But that's my personal view, that if I was coming to the end, I think I'd be looking to, if I could afford the SVR sort of rate, just to watch. But I could, it could be caught out and it keeps going up. But yeah, I suspect it will slow things. I can't personally see a massive crash because the still supply side is low relatively in terms of new houses, and demand is going to be there to a degree. Might just slow.
I think we've always got to remember is that if people who are renting properties, they're going to find their rents going up anyway, because landlords will have pressures, on their mortgages and things like that. So they're still going to compare themselves to whether they go ahead and buy something with a mortgage compared to what they're paying with rent. And, the differential probably won't be much different.
Yeah.
So I think that will keep the sort of market ticking along. And you mentioned, Neil, the supply and demand already. We apparently don't have enough houses in this country. So I think it's just going to slow it down rather than a crash. But
yeah.
I think it's going to be interesting as well what happens if Labour get into power. I mean, Labour have very much been clear that they are anti-landlord. And I'm not saying that's right or wrong, but I think we'll see a lot of landlords shedding stock, which will again increase the amount of supply in the marketplace. So I don't see a house anytime soon, to be honest.
Yeah, interesting. So we've tended to focus on the negatives. Were there any, this is to you, Roger, initially, were there any positives coming out of the mini budget that's good news for small businesses out there?
For small businesses, it's more, I think, for the national insurances, obviously, and the lower of basic rate tax. I think that's more for the employee side of things. I think that's obviously welcome, but those costs are soon wiped up with cost of living crisis and things like that. What's going to be interesting for me is to see whether actually the Chancellor does some further things to encourage growth, inverted commas. Like, is he actually going to do something with the personal allowance before people pay tax? Is he going to do it for the high rate people who are earning 100,000 and move that threshold from when the personal allowance is moved? And from a business point of view, I deal with a lot of individuals in business, and they always are worried about the VAT threshold kicking in at £85,000. And they never like to increase their turnover over 85 because suddenly they have to charge VAT.
Yeah.
A lot of the time, they're trading with the end consumer who then has to pay an extra 20%, or they have to stomach it. So it's going to be interesting to see whether he will do something by raising those thresholds, even if it's matching inflation.
Okay. Mark put a comment in the chat about the corporation tax issue. Will that make dividends viable as a mechanism? What are your thoughts on that, Roger?
Well, all he's done is, in his budget, as far as I can understand, is to cancel the proposed increase, which was for larger companies anyway. So for a small business person, nothing's really changing, apart from the fact that the so-called NHS surcharge on the dividends is going to be removed. So rather than paying 8.75%, it's going to come back down to the 7.5%. So from a bit of a tax point of view, if some people might be delaying their dividend extraction to the 6th of April next year rather than doing it in this current year.
Okay. Neil, from your point of view, was there anything particularly good that you saw in the mini budget, or anything that the Chancellor could have done differently from your standpoint?
Differently, I'm sure there's plenty, but I guess following on from what Roger was just saying, I think the corporation tax adjustment, it's not a cut, it's just not doing what they said they might do, is, I would say, helpful from a lot of the people we work with who are business owners might well have been staring towards 25% in the face. So that's kind of helpful from them. I'm not sure how it helps wider, because I think most people who are in that position probably going to mean they can pay the dividends, pay more of them. Is that going to go down, trickle down, all that sort of stuff? Not really sure. But from our perspective, looking at a lot of our clients, I think that's kind of helpful. So that's good. I guess, yeah, I think as a small business owner and with employees and stuff, those cuts to the national insurance and the 19p now, or will be, income tax is helpful. Not going to change people's lives. The thing is, well, I guess, though, is that we've already seen the 45p rate cut now being unwound. Is anything else going to be changed, good or bad? Don't know. And I think it's that credibility piece that has been lacking, because they make these announcements without whatever you believe. But this is what I heard, is that, they're not budgeted, or they have been and they didn't like it. The OBR have not been able to put their numbers out, and the credibility's gone. And now they are unwinding things. It's just no certainty on what's actually going to happen. It could be bad or good. I don't know. So it's just a bit of uncertainty again, which everyone, generally speaking, hates, not least investors.
Well, it's just frustrating, isn't it? It's just sort of one step.
I take some positives from what they were trying to do.
Yeah.
The idea. It's just the way it probably went about it.
Yeah. Well, what about you, James? Is there anything that could have been done differently in your viewpoint, or anything that is positive from your industry sector's point of view?
I don't think there's a huge amount positive that's come out of the last sort of couple of weeks, if I'm honest. And I always try and find positives. It's very hard to see. I guess if you as Neil said, if you've got a lot of cash in the bank, it's positive because you're going to be earning more interest on it. Does that mean you're going to keep it in the bank and not invest it in your business? Well, yes. So therefore, that's not a positive thing. So I guess for individuals, of course, there's positive news. But from a kind of macroeconomic point of view, it's hard to see any. With regard to what should happen, I still believe, and I've been saying this for a long time, that needs to be a reform in corporation tax for smaller limited companies. If you're a small limited company, a one-man band or a one-two-man, you are getting stung with potentially income tax, corporation tax, and tax dividend. It feels like the reasons for becoming a business owner is, especially as workers' rights go up. I do believe to encourage enterprise, there needs to be a review of that, whether that's tied in with an increase in the personal allowance, as was mentioned earlier. I don't know, but that was the sort of thing I think if we're going to encourage people to start businesses, to grow them, to then take on premises, employ people, invest. That's what we need to do as a country, I think. And I don't see a huge amount of that in government economic policy in recent years, if I'm honest about it. Locally, you see some of it, we've seen some grants and things like that, but I'd love to see more investment in our type of community to encourage people like us to start businesses and to grow them, from acorns and all that sort of stuff.
Yes, that's an interesting point. Roger, to you on that is if you were Chancellor, what would you do for small businesses? Obviously, it all needs a budget being available and it being funded from somewhere. But what is there some low hanging fruit that you think the government could look at that would support small businesses in general?
Well, certainly, I don't see why they. I mean, years ago we used to have a very low corporation tax. It's about 10% for micro businesses. So throw that into the mix, and I think they could, as I've alluded, increase the VAT threshold. Mm-hmm. And I think that because we want to remember, the small business person is the backbone of Britain's economy. So what we don't want to do is for them to feel that, why do I get up in the morning because I've just been taxed, or I can't do more because I could add fat to it. If we can start removing some of those barriers away, that may then encourage them to go out and get more work and then take an apprentice on, and that's how I think the economy should go.
Well, you've got one vote from Mark, who's in the studio, Roger for Chancellor. So
isn't there a TV programme or something at the moment? So I've not seen it, but
it'll soon be a hashtag Roger for Chancellor.
There's part of it. They whoever they binned off or will the Office for Tax Simplification. I don't know quite what they have achieved in their period of time, but nonetheless, axing it feels a little bit odd. But I think, like Roger said, and perhaps James as well, just simplifying some of those bits, like the personal allowance that gets tapered away above 100k, or like the child benefit for I'm going to say more good earners, 50k plus. And if one of you in the household, earns a bit more and the other one doesn't, you get hammered and it hurts. And I think people see that as a bit unjust. Rightly, wrongly, whatever. But, there are bits that I think that they could have done, which would have got probably public support, because they can probably see some unjust, even if you're earning 100k, that for most people is a huge salary, but they probably get it as opposed to the 45p for 150k plus earners, which is pie in the sky, and it's only for a minority of the population. So I think there are bits they could have done, and getting rid of a tax simplification unit feels a bit odd. But I don't know what they've achieved, so maybe they just didn't do anything. I don't know.
Well, that's quite possible, I'm sure. So before we sort of bring this to an end, are there any other comments, observations, or points you want to make just on this sort of general topic of the current financial status of UK PLC? James, I'll come to you first.
I think more than ever, really, it's time for not just business owners, but personal and business owners to take professional advice. If you need to remortgage, go to someone who is a residential mortgage broker. Pay the 300, 500 quid fee, whatever they charge, to get their advice. And it's the same if you're looking to do something on the tax side. You talk to an accountant like Roger. If you're looking for some investment advice, you go to someone like Neil and set your own ISA up for 50 grand and see what happens. So I think to be fair, it's been quite easy for a lot of people over the last sort of 5-10 years with low interest rate environment and market generally quite strong. I think guys like us as professionals, next couple of years, make us earn that money. Come to us, make us work for it. Professional advisors.
Yeah, I think yeah, definitely makes sense. I mean, I'm sure there are going to be people that are entrepreneurial and do want to start their own business. I think in any climate, as history has told us, it's possible to start your own business, whatever's going on. If you've got something that is of value to the market and you can position it and market it effectively, then there's still money to be made in various sectors, I guess. Roger, is there anything else that you'd like to add or comment on before we bring it to a close?
I think it was James said it. I think everything will reset at some point, and I think we've just got to keep calm through this bit of, as the Chancellor says, turbulence that is created, and not make any rash decisions.
Yeah, very true. And Neil, finally to you.
Yeah, I think that's a good sort of sentiment. And I guess positively, we started at the height of lockdown in April 20. We're growing, we're successful, and we're hiring. So to try and put a positive spin, we've not knee-jerked as a business. We are different to others, etc. We've not got a warehouse, we've not got mega machines and loads of employees. So granted, we're not there, but we're still hiring. And if there are some more things to help small businesses keep that sort of momentum, not knee-jerk, then I dare say I hope 23 is better, because 22 has been pretty hard. But I'm positive. I'm optimistic for that. And yeah, no knee jerking, please. Ideally, no knee jerking.
No, I think as we've said on here, and as we've touched on some of these previous sessions that we've had, the small business world are a tough old bunch. They've had quite a lot thrown at them over the last sort of few years. And I appreciate that not everybody has ridden the storm as successfully as some. But in my view, the majority have found a way forward. So it's almost like, whatever seems to be thrown at us as a collective small business community, it seems to get dealt with. But you're absolutely, based on what James said, do take professional advice in whatever you're doing right now, just to make sure you're structuring your company in the right way, that you're taking into consideration the impact of lending and borrowing and all those sorts of things, just so you know where you stand. Don't go in blindly. The stats are already against small businesses being successful in their first year. There's no reason, if you've got something of value to offer the market, that you can't make a business out of it. But just surround yourself with the right people. So on that note, I'll end it there. Thanks for you joining us on this session today, guys, particularly you, James, because I think his broadband packed up, so he's had to relocate to a local hotel. So I appreciate that. And also Mark, who joined us in the background in the studio for his comment.